Very good evening, everyone. My name's Andrew Dennon, CFO of Coro Energy. First and foremost, we have the disclaimer. So those of you who are familiar with this, those who aren't, please just take your time to read this and understand the nature in which this presentation is given to you tonight. So, Coro Energy is our AIM-listed, Southeast Asian-focused E&P company. We admitted to trading on AIM in April of last year on the back of a consolidation of two Italian portfolios, alongside a £14 million equity raise at 4.38 pence. We have a strategy to grow in Southeast Asia, where we see a supply-demand imbalance which underpins strong gas price markets, but also we see a scarcity of credible small and mid-cap operators like ourselves, so there is a niche there for us and a requirement there for us to be able to come in and develop our skill sets at the asset base that we see. We have an experienced and successful founding group. I'll talk about the directors on the next slide, and a very focused business development team that has seen us do 3 transactions in the 18 months since we admitted to trading. The first, in terms of our journey so far, as I said, in April of last year, we admitted to trading and initiated our Southeast Asian growth strategy. Our first transaction was in September, where we acquired a 42.5% interest in the Bulu PSC, which contains the Lengo gas field. That was followed up in December with an initial footholding in Malaysia with a joint study agreement with national oil company Petronas on an offshore block, offshore Sarawak Block 2A, which we'll speak about. And then in February of this year, we did our second transaction in Indonesia, acquiring a 15% interest in the Du Yung PSC, which is in the West Natuna Basin, which gives us access to the Singapore gas market. In terms of our shareholder base, as I said, when we raised our 40 million last year at admission, we introduced CIP Merchant Capital as a cornerstone investor, and they still own circa 21% of our outstanding share capital. And we also introduced Lombard Odier, who acquired 16% of our outstanding share capital, who have subsequently increased their position on the open market and today hold just shy of 25%. Both of those two institutions also supported us earlier this year when we issued a 22.5 million euro bond. Lombard Odier took up half of that issue, and CIP took up a quarter of the issue, with the balance being placed with other institutional investors. So as I spoke of, we have a board who have experience in the field in which we're following now. First and foremost, our non-exec chair is James Parsons, who's the CEO of Sound Energy and chair at Echo Energy. I'm sure most of you are probably familiar with him, but for those who aren't, he is a qualified accountant and has 20 years experience in the fields of management, strategy, and BD. He's supported on the non-exec side by Fiona Macaulay. Fiona's a geologist by background. She's the chairperson at Independent Oil and Gas currently and a non-executive director of Forexpo, as well as obviously non-exec on our board. Formerly, she was the CEO of Echo Energy and COO of Rockhopper. Marco Fumagalizza also sits on our board. He's a qualified accountant and managing partner at Continental Investment Partners. He's there to represent the interests of his investor group, who have supported us on both the fundraisings we've currently done to date. Our Chief Executive Officer joined us in May of last year, and his name's James Menzies. Now, some of you who are slightly longer in the tooth in the investment community will probably remember his name. He was the founder, or part of the founding group of Salamander Energy. Salamander Energy was founded around his kitchen table and then floated on the main market here in London. He grew that business with his colleagues to producing 20,000 barrels of oil production, or BOE equivalent, per day, before it was taken over by Afear Energy at the end of 2014, beginning of 2015, in a deal which valued that company at $850 million. As I said, 30 years as a geologist in Southeast Asia. James is a very tenacious business development CEO. He knows the patch like the back of his hand, and he's been instrumental in terms of leading us into Malaysia with the relationships that he has there. Anecdotally, the chairman used to be a client of his at the boutique he was working at prior to joining Coro. So very instrumental in leading our direction, and I'm Chief Financial Officer of the company. So why Southeast Asia? Well, first and foremost, let's have a look at the two areas where we have our existing assets and the gas markets that we'll be hoping to sell our gas into. So the first asset we acquired was the Bulu PSC, and in East Java, we see an average market price for gas of $5.50 to $8 per MMBTU. That's million British thermal units. In Singapore, where we have access to that market and MOUs signed with gas buyers for the Do Young PSC, we see premium gas markets of $8 to $11 per MMBTU. And that's principally because they import all of their energy. So you're competing with LNG, which is a very premium product and commands higher prices. Now, as we spoke about initially, we see a macro picture where there is an existing buoyant market, as we've just spoken about, but also upward pressure on those gas prices. Now, this bottom chart that we see below those in the middle is data from SKK Migas, which is the Indonesian regulator. What that shows is existing supply is in decline because these are mature basins, as you would expect. Future supply is coming online, which does include the two assets that we have, but notwithstanding that, there still remains a supply shortfall. So that imbalance is set to remain for the foreseeable future and continues to support our gas prices in environments where we've got GDP growth rates of 5%, young populations, and big power gen, fertilizers, and petrochemical demand requirements as well. That picture is also depicted on the right here by charts from Wood Mackenzie, who have looked at Southeast Asia as a whole. And in that top chart there, we can see that they're evidencing a belief of a supply-demand gap. And more interestingly, beneath that is a chart on where they think that supply-demand gap will be filled from. And what I draw your attention to is that perforated circle there. And that highlights uncontracted pipeline. What that means is assets similar to what we have already. Discoveries, which are commercial, have a POD in place, but are not yet in production. But also they're highlighting new gas discoveries, which is exploration. So we'll touch on that shortly as well. But again, two people there, as well as ourselves, all evidencing that there is a very affluent market here for gas production, and more importantly, a requirement for further discoveries to come online. So our first transaction we announced was back in September of last year when we acquired a 42.5% interest in the Bulu PSC, which contains the Lengo gas field. Now this is about 60 kilometers offshore East Java. It's well defined on seismic. It's been appraised, cored, and tested. And in fact, the two wells that have been drilled on the structured flow tested at 21.2 million scuffs a day and approximately 12.9 million scuffs a day. So very, very commercial flow rates. We have from Netherlands and Sewell an independent CPR, competent persons report, which has identified 531 BCF of gas in place, of which there's a belief that 359 of that is recoverable. We have an approved plan of development with the Indonesian authorities for this asset, and we're currently, or the operator is currently in the throes of negotiating the gas sales agreement, where we have numerous MOUs signed with gas buyers in East Java. And that will be the next news flow that you should expect to see on this, and we'd be hopeful of delivering that to you within the next 3 to 6 months. Off the back of that then, the project can then move towards final investment decision before we begin to spend money and start developing this asset, where we have aspirations of it coming online in 2021 and full plateau in 2022. More salient to, I guess, where we are in time is the third acquisition that we made in February of this year, where we acquired our 15% interest in the Do Young PSC. Now, we're about to start our 2-well back-to-back campaign here, which I'm going to talk you through both those drills shortly. But this is a really interesting asset because it's in the West Natuna Basin, which is a prolific producing basin. It's been producing for over 20 years. In fact, the West Natuna Transportation System, which is the large pipeline that takes the gas from the West Natuna Basin down, routing it past Singapore and Malaysia, and then into Indonesia, was built back in 2000. So there is ullage in that pipeline because these are declining fields. So there is a real easy route for us to get this gas to market. And we're approximately a 15-kilometer tie into the nearest point, which is through Premier's field. But in any event, if that wasn't to work, we'd have to route round it, and it would be a circa 25 to 30-kilometer tie into the West Natuna Transportation System to access that premium Singapore market. We have MOUs signed with gas buyers in Singapore, and on the back of this campaign, where we're hoping to increase the resource size, we will be in a better position to negotiate hopefully stronger commercial terms than what those MOUs say, because the Singapore guys want certainty of future delivery. So we're 440 kilometers away from Singapore in the West Natuna Basin. Like we spoke of, these are mature basins that are in decline, and they have been the workhorse for Malaysia and Singapore over the last 20 years. And what we have here is a biogenic gas accumulation, which is a large anticline structure that you can see on the right there that takes up 350 square kilometers. So it's a huge aerial extent. There have been 4 well penetrations through this accumulation, all of which have identified gas, but only one of which was actually designed to target this level. All the other 3 were drilled back in the late 90s, and they were all targeting bigger prospects in the lower Gabus, which is the main producing area in this basin. At present, we have an independently certified CPR that's identified 276 BCF of recoverable resource here, and we're hoping to increase that number with this upcoming drill. The well that we have that has tested this horizon did flow test at 10.8 million scuffs a day, so really healthy numbers as well. And we also have recently had a plan of development approved to commercialize this asset by the Indonesian authorities. Okay, so the naming of these are slightly confusing. We have 2 wells, Tambak 1 and Tambak 2. But the confusing element is that Tambak 2 will be drilled first and Tambak will be drilled second, so just bear that in mind. So the first of the 2 well campaign is Tambak 2. Now, this is an appraisal well, but I don't want to dilute the significance of this with the word appraisal because it can get lost because there's a little bit more interest in the exploration from an investor's perspective. But this appraisal is a 13-kilometer step out, so it's a big step out from the existing Mako South 1 well. What we're looking to achieve here is internal management cases to increase that 2C resource from 276 by an additional 100 BCF. Is the management case on our expectations from this appraisal. And this is relatively low risk. There's a 90% chance of success identified internally on this drill. The reason why that is in terms of the scoring of the risk, it ticks all the boxes. The main risk would be whether the reservoir is present 13 kilometers out and is in line with what our models suggest, but with 90% or better chance of success. And drilling, if you have a look at this chart, it's probably not the best to get a sense, but the Mako South well, you can see there, and Tambak 2, which is the appraisal well, is 5 meters up dip of that previous well. So you're drilling 5 meters up dip of unknown gas discovery. You are expecting to find gas. So this could be a very high impact, low risk well for us to increase our resource from 276 to, in the management case, 376 is what our aspirations are. The second well will also appraise the Mako field, but what we will also do is deepen that well to test a prospect in the lower Gabus, which is the main producing horizon in this basin. Now, we have identified a 250 BCF mid-case prospect that we will be drilling with a 45% chance of technical success. Now, that is relatively good in exploration terms, but let's be quite candid, there still is therefore a more than likely chance of it not working. So if it doesn't come in, the point that I'm stressing here is that this is a nice to have. This is a nice to have because if it comes in, it's taken us an extra 2 days to drill it, but we could potentially double or more the existing size of the resource as well. But it is exploration, so it does come with that risk disclosure. This isn't the same as the first appraisal well that we'll be drilling, but it looks very exciting. Now, incidentally, if I just slip back to this chart here, this Chakalang well, our CEO, Mr. Menzies, was on the drill team back in the 90s. They knew that there was gas here in the Mako field, but actually back in the 90s, it was viewed as a drilling hazard because it's shallow gas and they could have blowouts, and the technology since then has advanced. And there's lots of fields that we can point you towards. Certainly, Shell in the Dutch North Sea, for example, are producing from very similar shallow gas fields, and they have been doing so for the last 10 to 15 years. But in that well, they were aware of this. And in fact, that Chakalang well was dry when they tested it at the lower horizons. And if you can see here as well, there's another well been drilled up here. So just to put those in, Chakalang's here and the other well's here. Both of those were dry. So now you might say, why are we drilling this one in the middle? Well, what the current operator did was take the structure map and the amplitude maps and noted that there was a brightening in this area which wasn't exhibited in the either two. So what that tells us is there's something going on in this structure here that wasn't happening in the others. We're hopeful that it's gas, But like I said, 45% chance of technical success on that. There is some risk around that. So both of these wells will take 32 to 33 days each to drill. They're all fully funded. On a fully tested basis, the total cost is $19 million. Those of you who are tuned into the story will recall we acquired our position here by paying some consideration to the vendor, so $4.8 million, of which most of it was paid in shares, which are locked up and untradeable until we get all the results of this drilling campaign. And we also paid $10.5 million in cash towards this drilling campaign. So $10.5 million as part of our consideration covers half of that $19 million consideration, and the company Coro, we're 15% of anything else. Like I say, we're fully funded, and we recently announced our interims, which show that cash position. So 2 back-to-back wells, both appraising the Mako field, one being slightly deeper to test a 250 BCF prospect. In the management case, we're looking to increase resource towards 376, but the upside here could be nearer 700 BCF, and that's valuable for us when we're going to negotiate in Singapore. As I'd mentioned, these guys want certainty of future delivery, and in fact, the more gas you have, the better price they're willing to pay. So that's the upcoming drill that we have. We set sail from Singapore, where we were warm stacked back end of last week. We're expecting to be on license tomorrow, day after. We'll be jacking up, and then you'll see the spud announcement, and we'll be furnishing you with a lot more technical detail in relation to those 2 drills. Now, I also want to touch on Malaysia, because this is a big opportunity set for Coro, certainly in our belief. Now, Malaysia historically has been very much dominated by the majors. In fact, Shell's discoveries in the early 80s led to the Bintulu LNG plant being built in Sarawak, which is now the world's 2nd largest LNG plant. But there is prolific basins here. We've seen, here we go, over 1.5 billion barrels and 18 TCF of yet to find us. So that's upside in exploration, and 1.75 billion barrels of liquids and 29 TCF of reserves remaining. So big prolific basins here. The majors are net sellers. They're all retreating to the lower 48. And that's created big opportunities. And we're seeing a lot of rotation in the country at the moment. So PTTEP, the Thai operator, at the beginning of the year acquired Murphy, Malaysia for $2.12 billion. And that was actually followed up by some successful drilling that they've just completed in June with Kufpek and Petronas, where they made a 2 to 3 TCF discovery offshore Sarawak. So really good to see new entrants coming in like that, making big discoveries, becoming key players. The opportunity set exists, and the discovery that they made there was in a license that has been relinquished many times before. So there's a lot of overlooked opportunities within the existing licenses. From our perspective, at the moment we're working on a joint study with Petronas on Block 2A, which is offshore Sarawak. So we have a map here just showing you our location. We've got the Talang gas discoveries located 70 kilometers to the east. And we are adjacent and offshore to Bintulu LNG plant. It's been in the press within the last 6 months about facing a supply shortfall. So there is a very buoyant market for us also to be able to sell gas into. And certainly if it was an LNG plant, you're commanding that premium LNG price as well. So we have 2,900 square kilometers of 3D seismic, which is 2016 vintage, shot by BHP Billiton before they relinquished. We've been working on that, and we have identified multi-TCF potential over 200 square kilometers. This block is undrilled, so let's bear that in mind what we've just spoken about, previous blocks that have been drilled and overlooked. This one remains undrilled, but there's some very exciting opportunities here. We're in central Luconia. It's one of 8 geological basins that are very important. And as I've just said to you, there's been a lot of discoveries recently in the surrounding acreage. PTTEP with their 2 to 3 TCF discovery is the most recent, but Sapura E&P have made a host of discoveries which have totaled nearly 4.5 TCF of resource for them as well. We're showing you here some structures that give rise to your multi-TCF exploration, but we would like to address you once we've negotiated the PSC with some of the intelligence that we're sitting on at the moment, which is very, very interesting. We can't talk about it now because we're under NDA with Petronas, and it would jeopardize our commercial arrangement or negotiations with them, but we are actively engaged with Petronas in converting this joint study agreement into a PSC. We'd like to see that awarded, and ordinarily we would expect a 5-year term and a 1-well commitment to come in with that. This is, though, big E exploration, and it's offshore deep water, which isn't our core strategy. So you would imagine that we would like to bring in a farm, we would bring a farm-in partner, and conversations are beginning on that front as well. So lots going on here. In fact, we were over with Petronas 2 to 3 weeks ago, speaking at a high level with those guys about our engagement and where we'd like to move forward with this. And I'm quite hopeful of seeing some movement on that, hopefully by the end of the year, if not very early in the new year. I really like this slide though, because this represents the prize in Malaysia. Now, Malaysia is very different to Indonesia in terms of barriers to entry. So Malaysia, high barriers to entry, which means there are a real lack of small cap or mid cap independents. And in fact, it is dominated mostly by the majors. But what we see is 173 fields in open acreage. So that's discovered resource that's sitting in open acreage unallocated at the moment. A lot of these are 20 to 30 million barrels, and the majors moved on because it's not worth their time or not worth their interest. But also, if you look and you explore these and you drill the next bump along, they're often much bigger than the 20 to 30 million barrels that they initially look like. So this is a huge opportunity set for us. We're lobbying Petronas daily about opportunities and developing our relationship there. And I'd like to see Coro find some traction on this front in the short-term future as well. But yeah, just to give you a flavor of where the opportunity lies, quite happy to say that Coro has been approved as an operator in Malaysia based on its technical capabilities and its financial scale, which are the two tests that the class tests. And there's a huge fairway there for a company like us to develop their business and commercialize existing discovered resource. So in summary, this is Coro Energy's portfolio as it stands today. We spoke about at the beginning our initial Italian platform where we consolidated to production. That had 30 BCF of 2P, 2C reserve resource. Post our Bulu acquisition, that number increased 500% to 184 BCF of 2P, 2C, which is 32.5 million BOE. And now post De Jong, that number's increased to 225. And also we've introduced some prospective resource as well. So the point that I really like to get across here is that we consolidated 2 portfolios in Italy and got 30. We've done 2 transactions, and we've nearly increased that number, eight times. So the magnitude of scale that we can accrete over in Southeast Asia is much more prolific than us focusing our efforts on Italy. And those of you who are in tune with the story and saw our interims will note that we have it as a discontinued operation. So that means it's held for sale within the next 12 months as it's become non-core to our future operations. In terms of upcoming news flow, like I said, you should expect to see us spudding Tambak 2 imminently. So that RNS will come out alongside a lot more technical depth into those 2 drills than what we've previously published. That's 32 to 33 days on a fully tested basis. And then we'll move the rig over and drill Tambak 1, which is also 32 to 33 on a fully tested basis, and delivering you results then by November on both of those wells. For the Bulu PSC, GSA, gas sales agreement negotiations continue. There are a whole 7 or 8 MOUs, Sam, with potential gas buyers, so there's a lot of cat herding to be done in order to get everyone to their final position and make your final allocation there. So expect that with hopefully within the calendar year, and then project FID, and then we move on to field development for production at some stage in 2021, full plateau 2022. And then Block 2A Malaysia, we've presented all of our material to Petronas, the board are over there 2 weeks ago, developing those conversations, and on all fronts that's moving forward. So something we'd be very hopeful to deliver as news flow to you in the imminent future as well. So that's what I've got to say today on the slides. Any questions or queries? Happy to answer.
Andrew, what was the strategy in terms of the region originally, and what other potential areas did you look at?
Southeast Asia was always going to be our focus. Anecdotally, actually, So James Parsons at Sound Energy had a position in Indonesia. This was going back 6 or 7 years ago now, in Kalimantan. So he was interested to go back to Indonesia because he'd sold his position in Kalimantan to James Menzies at Salamander, thinking it was 300 BCF. And as I just spoke of, these things are often larger than what you might think they to be. James Menzies went on, drilled that, it was 800 BCF, and it became one of the backbone producers for Afir Energy. We also had Ilham Habibi on the board earlier. He had to step off because of his other commitments, but he remains as a special advisor to the board, and he's Indonesian and gives us some good access there as well. So it was a combination of opportunity to accrete scale, strong macro backdrop, and ability to transact and get deals done.
Hi, Andy. I'm more focused for the next 2 months. I presume that we'll be drilling in the next week, 10 days.
Correct. Yep.
Yeah.
Maybe even sooner. Yeah, we should be on license.
Would you say that by the middle of December, we'll have everything done?
Yeah, middle of December, both of those wells should be completed.
Excellent. That's the only reason I'm here.
Good. I hope it's informative.
Your Bulu,
Yep.
you're negotiating, or your partners are negotiating a gas sales agreement.
Yep.
To finance the project, are you trying to get debt finance on the back of that gas sales agreement?
Yes, that's the key ingredient towards getting, and these gas sales agreements, they're fixed price, usually for at least 5 years. So, you can fund these through the banks with prepaid type facilities as opposed to RBL, because you don't have that fluctuation on the oil price like you would if you were trading in oil. So, yeah, strong fixed terms on the gas sales agreements once reached.
Your Mako field, you've got a 30-kilometer tie-in pipeline. What's your costings on that?
So in terms of that Bulu development, I think the gross development of that's about $240, $250 million. The pipeline's a small element of that. So it's a small tie-in. The gas itself is 97% methane. So very few impurities are in there, no CO2. So it can be easily tied in. And it would be good for anyone else in the producing area who does have CO2 to blend their gas. So I think the opportunity to tie into the closer point at 15 kilometers is very real. But if we had to double that, you're looking at $8 to maybe $16 million in terms of costing, which is a smaller number on the bigger ticket.
Your partner, I think, took a lot of shares in the company, and you made reference to the fact that they're locked in for a period of time. I didn't quite catch, when does that lock-up period end?
Yeah, it was in the original announcement. I think it's some period after the final results of both of these drills have been released to the market. So I think it was within two or 3 weeks after we've announced the final results of these drills.
Hi, Andy. You mentioned one of the drills had a 90% COS.
Yep.
Is that the Mako shallow prospect?
No, so that's the Tambak 2 well, which is the appraisal of the Mako field. We're drilling 5 meters up dip of the Mako South well, which found gas. We've got 4 penetrations through the field, all of which have identified gas. So on the scoring of that geological chance of success, it is very high.
And could you tell me when that drill's going to take place?
We'll be spudding in hopefully the next week. So that's the first of the 2 well campaign.
Oh, right, yeah, thanks.
Please show your appreciation for Andrew Dennon of
Thank you.
Coro Energy.